please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Coal India has reported their highest ever monthly dispatches in December. Looking pretty good. What's the outlook for the remaining FY18? We asked Gopal Singh, the Chairman and Managing Director of Coal India, who joins in now. Mr. Singh, good morning. Thanks for joining us. Can you give us what the targets could be in terms of dispatches for the rest of the year on top of the 53.8 MT per month that you've done this time?
Oh yes, now we will see. I mean, every month we will be dispatching the highest, and probably every month we will be creating a milestone in terms of the highest ever dispatches. So January, February, March, all these months are going to be very good for Coal India.
So can you give us some numbers, sir? What kind of dispatches are achievable and what would you be targeting per day?
See, we will be dispatching about 56-57 million ton every month. More than this. This is the minimum.
Okay, so actually to achieve your 600 million ton target for FY18, you have to do actually 59 million tons every month. Achievable?
This is what I told you, that 57 million ton plus every month we will be dispatching.
Okay. The
59 million ton is achievable, and best part is that the number of rakes that we have been loading, that has gone up from 250 to 285 rakes per day.
Okay.
So that's very positive for us.
Okay. Well, actually just now our colleague Anshu Singh reported that the Coal and the Rail Ministry officials have promised to increase supply of coal to captive power producers, and that they have assured that the rake will increase from 244 to 332. So that is a big ask from the 285 that you are providing. Is this 332 doable, and by when?
Yes, if you look at the supply of coal to these captive power plants, already there is an increase of 24% compared to last year in supply of coal to these CPPs. But it's really a good news for Coal India that still there is hunger for coal for captive power plants also. So we had the meetings yesterday, and we have promised them that we are going to augment the supply to them, and because we have ample coal also available at a pithead stocks. And this 332 number is very doable. As I told you, already we have increased from 250 to 285 on average basis.
Okay.
So 332 now we are eyeing for, and I think our team will achieve it.
So my colleague Nigel D'Souza, who tracks your stock very closely, is also with us. Nigel?
Well, Mr. Singh, we are talking about your dispatches, and you always tell us that the Coal India family, is working towards that. So that's good news. Dispatches have been good, so congratulations on that front. But sir, in terms of a price hike, the last month you included some prices that were increased. Are we done with the price increase? And those charges that you're levied, does it move straight to your EBITDA per ton?
See, there is a reason for price revision, no doubt about it, because if you look at the WPI, CPI or import parity price, I mean, if you compare the ex-landed port price of the equivalent calorific GCV, I mean, if you compare the ex-landed port price of the equivalent calorific GCV of coal, we are giving a discount of something around 42 to 68% for different GCVs of coal. WPI, CPI has moved like anything. And last time, I mean, it was in May 2016 when just marginally prices were rationalized, in fact. So there is a reason, and if you look at the interest of the owners and of course employees, we have revised their prices, so they have got their share. Now it's the turn of the owners and others. So there is a reason for price increase, but the final call is to be taken by the Coal India board.
So will you go ahead, sir, and do it? Can we expect another price increase in this fiscal in the next 3 months?
See, I can't make you promise because
for the merger. Moving on to the financials, they expect an EBITDA CAGR of around 38% for FY19, FY21 for the merged synergies. So with Idea's cut in gearing as well as the early closure merger, they're expecting a target price of 130. So Vodafone also came out with a statement saying that, Idea's fundraising is to strengthen the balance sheet of the merged entities, and they also expect the merged entity to receive around 1,900 crores from the Aditya Birla Group going forward. So, the back of all of this idea is up around 10% today.
Okay, thank you very much for putting all those things together. Fund flows in December may have slowed, but 2017 flows overall have been at record levels. I'm referring to flows coming from retail investors to mutual funds. To find out if this extraordinary trend that we saw in 2017, and those bar charts are there for you, look at the numbers that we're looking at, an average of 20,000 crores every month coming into mutual fund kitty. Will that continue in 2018, and how will 2018 shape up? Shailesh Rajbhan, Deputy CIO, Equity Investment at Reliance Mutual Fund is with us. Morning, Shailesh. Thank you very much for dropping by. Well, you saw that bar chart. Was that an aberration?
See, directionally the trend, if you see, this has been a trend which has now sustained for a long period of time. And the direction is there, so we don't think that is a challenge. You'll always have a little bit of a change, and especially after such substantial inflows which have been flowing through, some kind of a change is definitely likely. But we don't see it as a change of a trend. It's just possibly a continuation of what we are seeing, maybe a little bit muted. And given where the things stand in terms of the shift towards financialization as we are seeing for every other asset class available, I think we are seeing these being seen as far more attractive opportunities as an asset class to be there.
Okay. Shailesh, hi. Happy New Year to you. Where are you seeing more money come in? Is it more into diversified funds or more sector-specific funds? Because you track, you cover pharma funds as well, and a couple of more sector-oriented funds. Are you seeing more money go there?
Significant amount of money is coming in diversified and balanced funds, and that has been the mainstay of the flow. In fact, that's been the mainstay for the last 6-7 months. Selective sector funds like pharma and all have also gotten substantial gains, but they have been more in the context of their sizes. So if you look at the overall larger sums of money which you're talking about, they are coming primarily to diversified and balanced strategies, especially on the larger cap space.
Okay. And how much money has come in lately into diversified funds? How much has the pie grown overall for the industry?
See, on an average, the industry has seen close to inflows of close to about 20,000 crores on a month.
Okay.
Right, and these are gross inflows I'm referring to on a sustained basis. So this is all flowing into balanced or diversified strategies.
Okay. There was this 16,000 crore odd in December, and in the first 2 days of January, DII numbers came in actually as sell. So, is there some worry that 20,000 crore is not coming in?
I don't think so. I don't think that we can even guess as to what will come.
Okay.
But directionally, we don't think that is a challenge, or the recent DISL numbers which you would have seen reflect that. It's just possibly a function of where market valuations are temporarily, and people may want to take a little bit of profit booking. But we don't see it as a structural issue, and directionally, it appears a fund flow positive kind of an environment. Okay,
which directly brings me to your estimate of valuations. At the moment, where do you see value? What may be the sectors of first quarter 2018, say?
See, I would try to focus on a 12-month window, to be able to really gauge it better, because a quarter can be here or there for various reasons. Directionally, our cases, the last 3 years have seen a very different set of companies really perform, right? We think the next 3 years will see an entirely different set of companies and business perform. And there are enough large spaces which are rationally valued. They are not possibly as cheap as they were in 2016 and before. But there are a lot of opportunities available. Like, you've got corporate lenders, right? Okay. The corporate lenders as an opportunity is still possibly early cycle.
Oh, okay.
Right?
Absolutely.
In fact, I was just going through your top 200 fund, and in that you have a relatively high exposure to the auto space, to some of the rural-oriented auto plays, names like Mahindra & Mahindra, Amara Raja Batteries, Castrol India, etc., Bosch. Is this a space that looks lucrative to you even in the new year?
Rural, I think, is turned materially. When we speak to companies in this particular area, we are finding these companies talking about very positively about the rural environment than they were talking about even 6-9 months back. And directionally, they are seeing a strength being more broad-based on the rural side. So we think the rural space, which had not delivered last year, can actually be a good supporter to the overall economic volume and economic recovery in the system.
Okay. Well, you're certainly putting your money where your mouth is. I can see that you have investments in SBI and ICICI among your top holdings. Sailesh, and I'm as convinced as you are that there is an equity culture that's more robust now. But nevertheless, do you think if there's long-term capital gains, which we fear every budget, actually materializes, because as we were talking about, tax shortfalls, will that be such a big dampener at all?
See, directionally, equities itself is a long-tail product. You have to be there for 3 years to really be rationally making money from equities. If you're making money in less than 3 years, is actually speculation helping you, or a lot of luck favoring you than real investment. So directionally, we have always been pushing equities as products which are more than 3-year, 5-year, 7-year products. And we think if that kind of an investment horizon investor takes, taxes become technically irrelevant from an ownership point of view. And the longer you hold the tax structure, even if it is not in favor, is a big sustainable, it's not a big sustainable factor which will determine your return. So you can actually get over the challenge if there is a challenge. So that's the whole thing.
Just one final question from my end. Since you manage the pharma fund and you have a high exposure of pharma in the top 200, Dr. Reddy's, there's Cipla.
Sure.
Do you think the worst is over as far as the US FDA issues are concerned?
A lot of the issues are getting behind. I mean, you could see a lot of good companies are coming out of the problems. They are changing the, they are actually getting over the problems and getting plants corrected. All these companies have worked significantly hard in the last 2 years. So FDA issue is a 2-year-old issue and not today, right? So we are seeing a big improvement there happening. And that, I think, will lead to the sector benefiting and, coming out of the big problem. More importantly, the US big price erosions are also behind us, at least a large part of it is behind us. Now we would have regular business competitive issues driven price erosions there. And Indian companies have corrected their pricing strategy or corrected their positioning to be able to there. We'll see a lot of consolidation there, competitive pricing environment, forcing people to get out of the business. We have seen announcements already by large companies. So I think all this will make that particular space far more healthy.
Sailesh, we're out of time, but this is the most interesting conversation. Thank you very much. We'll continue it offline and, of course, in subsequent mutual fund days, which will be the 7th of every month. We wrap up Bazaar on a very high note, not only with an optimistic note from a fund manager, but also with markets at all-time highs. Lots of trading ideas on Chartbusters.